Hi, Jeff.
Hey, Meesha.
Welcome to another episode of North Atlanta Real Estate Podcast with Meesha Rawal.
And Jeff Ahi.
And over the past few months, we have been tracking real estate data to provide you with insights into market trends, pricing, and demand to enable you to assess and manage your expectations and take or not take risks in real estate. And today we're going to dive right into the month of August and how our market has behaved over this, mid-year market.
Yeah, I think that's a great idea. And so let's take a quick look at interest rates. Always influence how the market is doing. And just a quick snapshot, obviously, we had unemployment figures came out last Friday, and that did move the market, and it has increased up to about 100% now. Expectations that in the Fed's meeting on 16th and 17th, when they actually report their decision on the 17th, the market already has priced in at least a quarter point drop. Some people are talking about a 0.5% drop, probably not going to happen, but that quarter point is already built into the rates. And so interest rates have come down to kind of 11-month lows right now. According to Freddie Mac, it's about 6.5%. According to Mortgage News Daily, which does kind of a more up-to-date daily tracking, it shows a little bigger drop because it has more of this data that has just come in the past couple of days, and they're saying it's more like 6.3% or so. So the good news is for the buyers is rates have come down. Maybe it's going to get a few people off the sidelines.
Yeah, and micro-tracking these daily interest rates and neighborhoods and zip codes gives our buyers a more hyper-localized insight into our market.
Yeah, I think we've talked about it quite a bit, and everybody talks about that real estate is local, which is true, but people have to realize it doesn't mean that it's your state or your city, because Atlanta is not one market. It has so many different markets, and so that's what we're really talking about with the data that we talk about.
And we've noticed neighborhoods can behave differently in the same month, like, two neighborhoods right next to each other, Windward, Seven Oaks, and Windridge are like within a half a mile of each other, and all three neighborhoods behave completely differently.
No, I think it's good. So that's one of the benefits. Hopefully the people that are listening to us, they are going to be able to get insights into these micro markets that we're talking about and dealing in.
Yeah, so how was our market, like 3005, 3001, 22?
Yeah, so generally speaking, what we are finding here now is that last year, low year in real estate sales across the country. We weren't spared from that either, very low. The first half of this year was tracking almost like last year, both in all these areas we're talking about. The one thing that we're noticing a little bit is that in Cumming area has seemed to caught up a little bit, and we are now a little bit lower in Alpharetta. Kind of Johns Creek area is tracking about 5% lower than last year.
Okay.
And Cumming is more like 2% lower than last year in total number of home sales. Doesn't mean prices.
Which is very small. 2%.
Very small change. But we have to remember that was the lowest number we've had in like 30 years. It was just like a really low baseline. And so we're still having a very sluggish year. The thing that's going to be interesting and will drive the market here when we're heading into fall is, what does this falling interest rate climate do to the buyers that have been wanting? We go out and door knock frequently, right? And we have met lots of people that are like, hey, I want to buy a house, but interest rates are too high. Home prices are too high.
Yeah. Well, the good thing is that the market is not overheated based off of our data, and buyers are slowly coming out and trying to see what is out there because inventory is kind of piling up a little bit.
It is. And, when you talk about inventory, took a quick look back. It's easy to forget how things were. We just took a quick look back at 2019. If we're talking about incoming, there were 1,000 homes on the market in 2019. And we have climbed back almost to that point again in 2025. Now we have 982, just a couple percent difference. And so we've climbed back to that peak. And to give people some kind of a reference point, when we hit our absolute low in the beginning of 2022, COVID, right, a year and a half after, Cumming only had 162 homes on the market.
Wow.
It's climbed to 500%. There was nothing for sale. That's why prices went, crazy through the roof, because there was people fighting over the few homes that were for sale.
And I think our listeners would find it fascinating that Cumming and Alpharetta pretty much are right next to each other, and so is Suwanee and Johns Creek. So when we talk about these neighborhoods, we're literally talking about a half a mile or like a mile away from each other. So they're very connected. So Cumming, being in South Forsyth, there are parts of Alpharetta which are also in Forsyth. So these neighborhoods are very interlaced. And if there are 1,000 houses in Cumming right now, how is Alpharetta doing?
So Alpharetta has also jumped up. However, it hasn't gotten all the way back. So Alpharetta, comparing today to 2019, we're about 80% of the level we were at the max. So we're 721 homes for sale in 2019 in August. And this year, right now, we were looking at 590. So there's about, we're 20% down. However, when we were talking about the peak again, and when we say peak, really the trough of in 2022, Alpharetta just had 104 homes for sale, and now we're up to 590. So it's a 470% increase. And so we've had, and like you say, these areas are very similar. And so we've had this big jump up in inventory. And just another snapshot of something that one of the metrics we like to look at, tell you strength of the market. When you talk about you put your home for sale in your list price, and how much of that do you get? It's a common question we get from our buyers. What percent should we offer, right? Back in 2019, both Alpharetta and Cumming area in general, we were getting about 96% of our asking price. So if you put a home on the market for $300,000, you're getting within 4%. That would be $12,000 reduction, maybe is what you'd expect. Now back in the spring of 2022, peak COVID crazed market, then these areas, Alpharetta and Cumming and such, these areas were getting like over 105% of your asking price. You were getting more than you asked for.
So it's a key performance indicator of the market in terms of whether it's a buyer's market or a seller's market. I think if you are expecting more than what your house is listed at, and if you really are getting it, it would probably indicate more of a seller's market.
Oh, absolutely. Strong seller's market. And then as it falls, as it has now, currently, the peak, like I said, was over the 105% for both areas. Now Cumming right now in August was about just over 95%, and Alpharetta it was 97%. And so what we're looking at there is you can see that it has gotten a weaker market since 2022. People know that. I mean, common knowledge here, right? But it is right now, it is still getting a little weaker. And so it'll be interesting as we go into the fall season, what happens.
So the ratio of sales price to list price is a key performance indicator, or KPIs. And then another key performance indicator would be the supply of homes, like we discussed. Is like we have about 998 houses. In Cumming.
And so absolutely,
And then the days on the market is another indicator as to how our market is doing. Now, one or two of the invisible key performance indicators that we don't actually get to know about is how much closing cost a seller provided to the buyer at closing and how much money the seller spent on repairs. Because a lot of people look at sales price versus list price, days on the market, but they don't realize in order for a seller to sell the house, maybe they incentivize the buyer with closing costs and did a whole lot of repairs based on the inspection report. And I feel like these days we've seen a lot more sellers offering closing costs to their buyers.
Yeah, most definitely. I think, I was just going through preparing a market analysis for a seller here just a couple days ago. And, by just looking, I didn't tabulate the exact amount, but we both know when you were trying to buy a home in 2022 in the spring, you couldn't ask for anything. You were never going to win the bid, right? It was like zero all the time. And then now I noticed about half of the sales of recent have some amount of closing costs ranging anywhere from 1% to 2% typically. And sometimes you'll see some built in where they're building it all in. But yeah, there's definitely closing costs being paid half the time now, I'd say.
Yeah, so I think buyers are looking for and are looking at a more balanced market to get more negotiating power.
Yeah, I think it's going to be, it's interesting to see as we move on to the next Fed meeting. We have, of course, the one here in September, then another one towards the end of October, and then another one in the beginning of December. If the rates keep coming down, and a big if too, that the job market doesn't deteriorate, because obviously that's a big driver in the news today. We've had a lot of job losses, or at least we should say, in relation to how many we were creating. Now we're creating almost nothing, and so it's a big decline. And if we have a situation where people are fearful of losing their job, they put off big purchases like a home buying, obviously. And so what will happen as we enter our fall market? So I guess we're going to keep a little eye on that for everybody.
Absolutely. And if anybody has any questions about the market that we've currently had and the future trends, feel free to reach out to me or to Jeff, and we'd be happy to answer any questions for you.
Yeah, certainly.
Till our next episode.
This is Jeff Ahi.
And Meesha Rawal.
Saying goodbye.
Bye.